I mean, it really illustrates the fact that China's growth is really very uneven. So the 4%, Y-on-Y GDP growth is pretty much in line with our expectation. We had kind of expected that with some of the power shortage issues relieving itself and pretty strong industrial production and export, that would have a bit of a buffer. But you're absolutely right. Retail sales was a big miss. And if China really does, obviously should care about common prosperity, about the welfare of the consumer side, this is one area where I think that it really requires a little bit more policy support. So today we also got the 10 basis points MLF rate cut, which is in line with our expectation in terms of timing, but was a larger than expected cut, which really suggests that I think policymakers now are much more concerned about growth, and we should see more concerted action going forward. So it'll be interesting to see what type of support we will get. I guess the one thing we need to watch is, because I don't think they're going to abandon zero COVID anytime soon, certainly not through most of this year. There's obviously going to be pressure on small and medium-sized companies given what's happening with the services sector and kind of the restraints on that front. So it'll be interesting to see to what extent we'll get more relief and policy support on the SME sector. But again, the big question is whether we're going to see more fiscal support, not only via infrastructure, but maybe we'll see some more support on the consumption side. Property, obviously, real estate is a big concern, and I think that's very correlated to confidence and what that means for households, because so much of household wealth is tied to property. So we really need to see more signs of efforts to kind of stabilize the market, which at the moment is still pretty elusive.
The consumers no doubt need some support at the moment in terms of those retail sales numbers. How challenging is this structural transition to a consumption-led recovery now?
Well, the problem with stimulus and, again, trying to boost consumption is obviously, part of, the policymakers have less direct impact because it's possible that households are not confident. They might be, increasing their savings, and then you'll have less multiplier effect, which is why a lot of fiscal policy support in China tends to be geared more towards more infrastructure, where they feel they have a little bit more leverage and control. But again, because the structure is so unbalanced, I think it's really all about trying to also restore some confidence. And as I mentioned to you earlier, the real estate sector, given so much of household wealth is tied to that, is also important as a way to anchor confidence as well. But again, I think also confidence about, income prospects, employment prospects. Again, this zero COVID is having an impact. So the question is to what extent we can get over this kind of Omicron wave and we can see some easing. Hopefully that will happen. And I think in the short term, I think things are still a little bit challenging.
What about the transmission? How long is it going to take for some of these support measures to actually bear fruit and take effect? Some are talking about the second half of the year, and in the meantime, the situation looks pretty concerning.
Right. Well, these things have lags, right? And even though we're starting to see more clear signs of easing, we need to see more, right? So again, we have seen the credit impulse in China turn a little bit in the last couple of months, but still from a historically tight level. And usually in the past, we see this turn in credit impulse having an impact on real estate activity with maybe about a 3 to 6 month lag. But again, the other challenge to China is the strength that we've seen on industrial production and exports and goods demand. We're concerned that is going to also sequentially slow down because global goods demand is also expected to slow down. We can't expect the U.S. to continue to purchase this amount of goods and sustain this amount of goods momentum for very long. And we see, we could see already some front loading of inventory ahead of Chinese New Year. So even if we see more policy support to stabilize growth, we have some offsetting sequential slowdown from the global goods trade cycle, which I think will offset that. So this year, we are expecting only 4.7% growth in China.